Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings. Today we're diving into LogicMark, a company that just got a bit of a notice. And no, it's not an invitation to a party, but something that could seriously impact their stock. Let's find out what's going on. LogicMark just filed an 8K report, which is basically a corporate uh-oh moment. This filing is about them potentially getting kicked off the Nasdaq stock exchange. Here's the deal. Nasdaq has a rule that a company's stock price needs to stay above $1. LogicMark's stock price has been below that for 30 days straight. This means they don't meet the minimum bid price requirement. Usually when a company's stock dips below $1, they get about 6 months to fix it. But there's a twist, because LogicMark did a reverse stock split, which is like taking a bunch of small slices of pizza and making them into fewer bigger slices multiple times over the past couple of years. They don't get that extra time. Think of it like a second strike, only this time it's a might user sign. It's immediate like a second strike, only this time it's immediate. The report says that unless they do something, their stock will be taken off the Nasdaq on March 31 in only a few days. This is a big deal because being delisted from a major exchange can make it harder for investors to buy and sell the stock, and it usually makes the stock price go down. Now, LogicMark is fighting back. They've asked for a hearing to appeal. Think of it like going to court, but instead of a judge, it's a panel that decides their fate. They're hoping to convince the panel that they have a plan to get their stock price back up. While they wait for the hearing, their stock will keep trading on Nasdaq, which is good news for now, but there's no guarantee they'll win the appeal. The company is saying that they've been working hard to fix this, but there's no promise they will be successful. This is not great because it means that LogicMark has been trying to get the stock price up, but it still went down. There's also a section called Cautionary Statement regarding forward-looking statements, which is basically a legal disclaimer. It says that anything the company says about the future is just a guess, and things could change. This is standard stuff in these filings. Scroll current liquidity position and the need to obtain additional financing to forward ongoing scroll to the company admits they need more money to keep going. This is not a good sign, especially when combined with the risk of being delisted. It means there could be problems ahead if they don't turn things around. So what does all this mean for LogicMark? Well, it's a mixed bag. On one hand, they're fighting to stay on Nasdaq, which shows they're not giving up. On the other hand, they need more money and they're at risk of being delisted. This is not a good combination. This company is walking on thin ice. The company's struggle to maintain its stock price above the minimum requirement combined with its need for additional funding paints a picture of financial stress. The reverse stock splits they did in the past didn't solve the problem, and now they don't get the usual grace period to fix things. LogicMark is a company that needs to prove it can turn things around quickly. If they can't convince the Nasdaq panel that they have a solid plan, they could find themselves in a much tougher situation. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more deep dives into the world of corporate filings. What do you think LogicMark should do to get their stock price back up? Let me know in the comments.